President Bola Ahmed Tinubu extends the student loan scheme to include skill development. Global markets mixed as China moves to support yuan. Plus, oil studies on mixed supply queues. Cautious outlook on China. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this time. It's that time we talk business. I'll start by telling you that the federal government is set to launch the Nigerian Education Loan Fund to operationalize a students' loan scheme. Executive Secretary of the Student Loan Board, Akintunde Sawyer, states this while briefing State House correspondent after a meeting with President Bola Ahmed Tinubu. The legislation provides for establishment of the Nigerian Education Loan Fund, which will have the power to administer, supervise, coordinate, and monitor management of student loans in Nigeria. The loan is expected to be sourced from the education tax.
This is a great opportunity for that applicant, and they are the ones at the center of all of this. This act, effectively, the intention behind it is to ensure that the reason for not being able to go on and further your education at the tertiary level is not for the lack of finance. This act, this law seeks to bridge the gap between desire to study and capacity to go further. It seeks to bridge that gap if the gap is one that is created by lack of finance, lack of funding. This intervention will affect the lives of many Nigerian youth, because that's usually the bracket that want to further their education. It will impact the lives of many Nigerian families, because the onus to pay for education tends to fall on parents or on families. Well, this act is going to enable us to intervene and support families, particularly those at the needy end.
Is a way of being accountable to the taxpayer, because the essence of education tax is to consolidate and restore education integrity and quality in Nigeria. And in fulfilling that part of the heart, so that is why Education Tax Fund is one of the sources of funding, by God's grace, that we will use actually to propel and execute this laudable program.
On another cheering note, the market on Monday hits another milestone, recording an all-share index of 95,768.12 basis points at the end of the first weekday of trading on the Nigerian Stock Exchange. A total of 721 million shares in 15,757 deals, corresponding to a market value of 14.4 billion naira, were traded. The current market capitalization of the Nigerian Stock Exchange is 52.4 trillion naira. The financial services industry dominated the activity chart, with Transcorp, Veritas Capital, Assurance PLC, and Access Holdings PLC at the end of this session. And still on the markets, the bullish trend in the equities market also shows no sign of slowing down as investors' confidence continue to drive positive momentum. This is the renewed direction Chartered Institute of Brokers say is needed to drive the needed investment for economic growth and development of the country.
The performance of the stock market is been extraordinary, something that has come up on account of positive developments in the country. One, the smooth transition of power from one civilian administration to the other. Secondly, the initiation of policies by the federal government that are market friendly. The current administration has positioned itself as a market friendly administration with the kind of policies, economic policies that it has enunciated and it has formulated and they have introduced into the country.
Now, the Nigerian Exchange Limited closed 2023 on a high note, fueled by renewed investor confidence in listed companies. This positive momentum persisted into 2024 as the Nigerian stocks recorded world's second best gains so far in 2024, culminating in an impressive close at 94,538.12 basis points on January 19, 2024. Our attention on the program today is on the stock market, and Ayodeji Ebo, an economist and managing director of Optimus, also AfriInvest, is our guest who joins us from Lagos. Mr. Ebo, thank you for being here at this time.
Yeah, good morning and thanks for having me.
Great. It's been a trend we've had to discuss the markets usually with you, either it's at the end of the year or at the beginning of the year, and it's usually sharing. But what we are seeing today, it's an all-time high where capital markets performance in January 2024 has been termed as impressive. What were those high points and what are the push factors responsible for this feat?
Okay, thank you very much. And it's been very interesting. We've played the last few trading days, and when you look at transactions within the year, so one of the major responsibility for that is we're continuing to see increased interest from domestic investors, and as a result of the impressive the performance rather of the market last year. So you see the stock market closed at almost 40% last year, and that generated a lot of news across the country. And as a result, we saw significant interest from local investors, both domestic and institutional investors this year. And that, we can say, is responsible for the major increase we are seeing. But aside that, if you look further into the data, you would also observe that the top stocks, so based on market cap, if you take out the top 5 stocks by market cap, because of if you take out their performance in the market, with what we saw in the last 3 or 4 days, market has begun to taper in terms of stabilize, or what we also say market correction. We're already seeing that, but overall, market has been positive. It's been an interesting time for stock investors, and we believe that based on the also expectation of very strong positive results, that would also help at least sustain the positive momentum.
Let's reflect a little. So some 10 years back, those who invested in the stock market got their fingers burnt, and people from then began to be very cautious in investing in this market. Yes, reforms have come, reforms are still ongoing. Then the new vibe from the new administration is another encouragement. Would you say what we're experiencing today is as a result of this long-term reforms, or is it the immediate steps that are being taken to ensure that the market is consolidated and not just foreign portfolio investments coming in, but also the domestic investors?
Okay, very interesting question. The first thing we need to note is that the conditions surrounding the market 10 years ago and now are two different things. So then part of what we saw was that a lot of investors were investing in private placement companies that were not even listed, which led to significant loss. And there was also margin. That means people were borrowing to invest. But what we are currently seeing now is that new inflow, new interest on the back of the performance that the market did last year. So amidst improved regulations that we've seen, we believe that this can be sustained to a level. But we also need to note that investment in the stock market is long term. And for those that are new to the market, they need to have that understanding. It's not a market to come in and you quickly want to make money in few days and step out. Yes, stocks have moved and have returned impressive returns, yes, within few days. But it's not the normal period or gestation period in the market. So for new entrants into the market, they need to understand that. And also when markets have moved this high, there will always be what we call market correction. People will take profits. So when investors are coming in now, should also be cautious. But for long-term investors, if there are those that buy consistently, so even when you buy at this level, when the market comes down, you still buy more. Overall, market will continue to improve as long as those businesses that you are buying or companies that are buying continue to perform. So it's good to have that proper understanding, because part of what is also getting the concern that we are having is that those that don't understand how stock markets work are coming in for the sake of the return that they heard about. It is good to understand the risk, understand your risk profile. Don't use short-term money to invest in the stock market.
Like
Investment
I said,
in the stock market
it's a long-term investment. Well, as we still experience this growth in the market, people are still saying, or like industry players are still of the opinion that if you look at our market capitalization, it's still nowhere compared to the likes of South Africa. What should we look forward to going into the year, and how can we grow this market beyond this level?
Okay, thanks. I think it should be apples to apples. When you check the South African market, the number of products that they have there, very exotic products that they have there, derivatives, options that is traded in that market, and the number of companies that are listed in that market differs from Nigeria. So when we're comparing it based on market cap, we should be a bit careful that our market, currently the two markets are different. So what we say we can look forward to, if the economy trajectory can also be positive, it will sustain that momentum. Secondly, if the FX policy can be also consistent in the medium to long term, when we also begin to see foreign investors come into the market, it will also prop up prices, which means that investors' net worth would also increase. So it's we feel that there's still a lot of opportunities with the domestic players. Sometimes domestic players bring stability into the market, because even if there's a crisis within global space, most people investing are Nigerians. So exiting the market at ridiculous prices doesn't really occur. You don't see significant sell-off. You just see if there are if the results, because there's also one thing that we need to note, as we're expecting results now, if they don't meet investors' expectation, we will see a major correction. But if they meet or exceed investors' expectation, markets, there are a lot of upside opportunities in the Nigerian stock market.
Okay, let's take a look at global stocks. How are the stocks around the world doing, and what is the possible direction they are going? More so that we're having this tension that is that is yet to abate. Talking about the Red Sea situation.
Okay, thank you very much. And I think that looking at even the U.S. market yesterday, at the open was almost on a bullish run. The S&P 500 also attained another new high. So most of the top stocks were really on a major drive yesterday. So we can see that even the U.S. stock market, so most of the global market are also on a very bullish momentum. And when you look at the projection for this year, with the expectation that interest rates would be cut, or the aggressive position on raising rates would also be reduced. And on the back of that, we expect that the stock market should improve or should return significant performance in 2024.
Okay, good. Before I let you go, what kind of stocks should investors and potential investors be looking at this year? Yes, at sometime last year we had the young people going we talk about the MTN shares, and a lot of talk has been on looking forward to listings of NNPC Limited. What other stocks should we be looking forward to, and should we be excited that we should be having bigger listings this year?
Okay, thank you. I think we would stay with the way the market has started. We should see more listing this year because pricing now will be more appropriate for investors trying to raise capital. So if we're going to look at maybe stocks that would interest investors this year, I think we can look at it will be most likely the banking stocks this year because of the recapitalization. We'll see for some of them come and raise public offer or right issue to recapitalize this year. But MTN also still remains a major stock that investors should hold because of one, you understand the business that they do. There's also potential for upside. When you look at their data revenue, there's potential to increase that. Their payment services also, there's still a lot of potential to expand on that. So I think by and large, if you look at it based on sectors, the cement sector, we still feel there's opportunity within that space, given what government wants to do in housing, road construction, would also be very positive.
Okay, thank you very much, Ajodeji Ebo of Optimus by Afri Invest, for sharing your thoughts with us at this particular point in time. As the market progresses, we're going to be talking more on it. Thank you. And for the global market update, Neka Oko is standing by. Hello, Neka. How is it looking this morning?
Hello, Benny. Welcome to Global Market segment. Let's start from Asia Pacific market, where Hong Kong stocks rebounded this Tuesday after 2 straight days of declines. The Hang Seng Index jumped as much as 3.41%. The Shanghai Composite also rose 0.64%, while the Nikkei 225 in Japan depreciated by 0.08%. U.S. stock futures were little changed early Tuesday morning after the Dow Jones Industrial Average surpassed 38,000 for the first time ever. Dow Jones futures fell 19 points, S&P 500 futures rose 0.02%, and the Nasdaq Composite is up by 0.09%. Now, European markets are likely to open mostly flat, with Germany's DAX expected to open 133 points higher, UK's FTSE 26 points up, and France's CAC 40 59 points at 7,427. Now, early figures from African stocks point to a positive open, with South Africa's JSE Africa 40 already dominating at 0.79%. Namibia's overall index is marginally positive, while we are still expecting figures from the rest of the stocks. And that's Global Market Review. It's back to you, Benny.
Thank you, Neka, and that's quite cheering. Now, the Small and Medium Enterprises Development Agency of Nigeria, SMEDEN, is set to commence a nationwide small business census to create a credible and comprehensive database of MSMEs in the country. Director General of the agency, Charles O.D., at the Business Skills Development Initiative Empowerment, says 55 beneficiaries, each from 13 states of the Federation, will be among the first set. Muplang Dakok reports that the Business Skills Development Initiative program is expected to empower and train nano and macro businesses on entrepreneurship, education and vocational skills, and will present beneficiaries with various equipment at the end of the program.
The aim of this training is to ensure that we get to these people that needs this equipment, especially the startup kits. A lot of people are there that have learnt one skill or the other, but they find it difficult to get it.
Our message is simple. When the Nigerian business person prospers, Nigeria prospers. We're looking forward to the journey ahead, knowing that hard things are what.
Now, the one-week program is running concurrently in 13 states, which includes Enugu, Niger, and Akwa Ibom states. And our prices were little changed on Tuesday as traders weigh a host of conflicting supply and demand worries, with rising tensions in the Middle East and cold weather was disrupting production in the United States. Brent crude futures fell 2 cents to $80.04 a barrel, while the U.S. West Texas Intermediate crude futures were last down 1 cent at $74.75 a barrel. Both the contracts had settled about 2% higher on Monday as a Ukrainian drone strike on Novotek's fuel export terminal raised supply concerns and drove up prices. Analysts say Novotek is likely to resume large-scale operations therein within weeks. And gold drifts higher as dollar slips ahead of central bank's verdict. Let's now take a trip to the commodities market. And talking currency, the Naira further declined against the dollar on Monday in both the official and black markets. It depreciated 2.54% to close at 929 Naira 34 kobo to a dollar at the close of business, based on data from NAFEM where Forex is officially traded. Let's see the official exchange rate. Well, this is where we end this episode of Business Express. Do keep a date with us tomorrow for a fresh edition.